Thank you for listening to the Real Estate Voice podcast. I'm Vernon R.E. Jones, managing broker, owner of Jones Homes, and for over 30 plus years, we have serviced the 7-county Denver metro area. Weekly update. Mortgage rates decreased slightly. The average 30-year fixed rate was down 3 basis points last week. Again, 3 basis points. That's not 3 interest rate points. So you might be talking a quarter of a point. Freddie Mac, which is the secondary market where most mortgages get sold to, continues to state that the overall economic growth remains strong. I concur. Rising inflation, however, is still impacting consumer sentiment, which has markedly declined in recent months. Basically, as we go into the spring home buying season with higher mortgage rates and continued low inventory, we expect home price growth to remain firm before slightly cooling off later this year. Existing home sales rose in January, a positive move upward, following the previous month where sales declined in December. Of course, in December, we usually believe that, and it often happens that, December, November, January are slowdown periods as people celebrate the holidays and things of that nature. Completed transactions, which include single-family homes, townhomes, condominiums, and co-ops, were up 6.7% from December to the seasonally adjusted annual rate of 6.5 million in January. Housing supply struggles to keep pace with demand, which is reflected in the inventory at the end of January. 860,000 units, down 2.3% from December. The inventory of homes on the market remains woefully depleted, and in fact, is currently at an all-time low. We definitely need to have more supply at the lower end of the market in order to achieve more equitable distribution of housing wealth. Whereas I will say something on another note, homes above 500,000 are up compared to this time last year. Does that mean more people own $500,000 homes, are putting them in the market, or prices of homes are going over 500,000? Both are true. Sales of new homes, these are new construction homes, fell slightly more than expected last month as rising mortgage rates and higher prices might have sidelined some first-time buyers from the market. The inflationary pressures also affected builders receiving supplies and dealing with higher costs of those supplies, lumber, electrical parts, roofing, you name it, whatever it takes to build a house. The seasonally adjusted figure came in at around 801,000, according to the U.S. Census Bureau. This figure was just a modest setback and thus reinforced the fact that both home shoppers and builders continue to stand firm against the challenges posed by prices and inventory. In other words, because of all these pressures, they just stop selling houses, and because of all these home price increases, buyers haven't stopped buying. Pandemic-related pressures appear to be easing in other parts of the economy. However, the shortage of key building materials, as I said earlier, persists as builders work hard to catch up in large backlogs that they have. According to the Labor Department, jobless claims reported for the week ending February 19th were 232,000, just under expectations. Continuing claims totaled 1.48 million, a decline of 112,000 from the previous week, the lowest level in 52 years. Despite the wave of Omicron and rising inflation, the U.S. job market has held strong since the end of 2021. The U.S. added an average of 541,000 jobs each month since November. An unemployment rate held even at 4%. Everyone's situation is different. That may all be houses, but everybody's situation is different. That's what we look at when we deal with if you need to sell your home or desire to sell your home, or if you're buying something else, or both. We look at your individual situation to see what benefits you the most. Thank you for listening to the Real Estate Voice Podcast. I'm Vernon R.E. Jones. Any questions? Feel free to call me at 303-359-8218. As always, be safe and have a great weekend.